Okay, guys, this is the episode you have been waiting for. Welcome to Andrea Lake 101, the making of a billionaire, crypto 101, and compounding returns. Everybody wants to know how incredibly wealthy people compound their money. Here we go. In America, most people only understand how compounding returns work against them, like in credit card debt or in student loans, where the lender is actually charging you less money than the interest that's accruing against you. So it doesn't matter how long you pay that loan will never get paid down and it will never get paid off. That is a usurious loan. That is a bad idea. I do not know why it is allowed to give loans like that. And look at that, 20 seconds into the episode, I am off in the weeds. However, that same thing can be true working to your advantage. Oh, hi guys, Andrea here with a legal disclaimer. Thanks, attorneys. Disclaimer, Andrea Lake is not an investment advisor. This is not financial or investment advice. This content in the Andrea Lake 101 podcast is for educational and entertainment purposes only. The opinions expressed herein are the personal views of Andrea Lake and should not be considered as a basis for making investment decisions or construed as advice to interact with any particular financial product. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Andrea Lake shall not be liable for any errors in the content contained herein or any action taken by you in reliance of such information. In addition to the disclaimer, we have a disclosure. Andrea Lake may have our own investments in certain assets mentioned in the Andrea Lake 101, the Making of a Billionaire podcast, including cryptocurrency. Now back to our regularly scheduled programming. When you know how to compound returns in your favor. On the last episode, we talked a little bit about the magic penny, that little riddle that's all over TikTok about, would you rather have like $100,000 or a penny that doubles every single day for a month? Well, spoiler alert, take the fucking penny. Why? Because at the end of 30 days, 30 flips of doubling and compounding, you're at $10,700,000. It is wild. But how the fuck do you actually do that in real life? Oh, good question. Good question. Well, today we're going to learn. We're going to learn about basic applied mathematics of compounding returns. How fucking scary does that sound, and why does it sound scary? So stick with me, kid, especially if you're one of those people who has been saying all of your life, I'm not really that good at math. I don't really understand this stuff. I don't know how to understand this stuff. It's really complicated. It's really hard. Well, I believe that one of my superpowers is to be able to explain incredibly difficult, complicated things in a very easy way that people can understand. And so let's fucking hope that I am right about that and that you are going to understand today a whole lot more about compounding returns before we are through with this episode. But first, we are going to talk about crypto. What even is crypto? Now, a lot of you that are watching, you have some idea of what crypto is. You at the very least have heard of Bitcoin, probably Ethereum. Crypto is a decentralized concept that has actual physical products attached to it that nobody really owns, that are built in an open sourced way, or that somebody did create and they actually own most of the coins of that asset, but they sell it in this very sort of transparent way. That all sounded convoluted and complicated, so I'm going to dig in on some examples. I made myself notes. So while you guys have all heard of Bitcoin and Ethereum, most likely, those are two big ass cryptos. Those are the two biggest players in the space. Bitcoin is like 50 or 60% of the entire crypto market, so that's a lot. And basically, Bitcoin is just like a place that stores value. It's kind of like gold. It's a thing that a whole bunch of people have decided is worth something, and so it's worth something. Similar to diamonds. A whole bunch of people just decided that diamonds are worth something. As a matter of fact, De Beers made fucking sure that that would happen. Google it. Fascinating story. And even though there are things that look exactly like diamonds that we can grow at 1/10 of the cost and that don't have all of the bad fucking juju associated with a lot of diamond mining, people still want just like, quote, real diamonds, even though discernibly to your eye, you couldn't tell a difference. That is brilliant marketing. Bitcoin, samesies. Just like a whole lot of people believe a whole lot of things have a whole lot of value, like, I don't know, Beanie Babies, right? Any kind of tradable, any kind of collectible, any kind of currency. Money is only money because we all agree it's worth something, right? The US dollar actually is only worth something because all of the people in America believe that it's worth something, and they believe if I hand you $20 for this, you are going to give me this thing that I believe is worth $20. So crypto, for at least Bitcoin, kind of same. A whole bunch of people say Bitcoin is worth this much money for a single coin of Bitcoin, and that amount fluctuates wildly, way more wildly than any currency that exists. And we are going to talk a lot about that today. But there's a whole bunch of other cryptocurrencies, all of which do different things. Okay, so sit back, relax, get cozy, and I'm going to explain a little bit more about crypto. It is a rainy day in San Diego. As a matter of fact, it is pouring rain here, so I am comfy and cozy and warm inside in my pajamas talking to you about crypto. This is not financial advice. I do not recommend any of these coins. I am simply telling you what some of the different coins do so that you can kind of understand the different cryptocurrencies actually do different things. They have a functional utilization, they have a value. There are a bunch of different gaming tokens. For example, Decentraland Mana is a gaming token that I trade in. I do not recommend it. I only trade in it because it has high volatility. And as a matter of fact, I'm going to divest out of it, not for any particular reason other than I just don't want to trade in that particular gaming token anymore. There is a token called Helium. And what Helium does is there's all these little boxes that people can buy and put on their roof, and it will link into a satellite link to like Starlink or to some other satellite in the sky that is beaming down internet signal. Then it shoots out internet signal, and you, as an end user, can tether in to a Helium network and access the internet through a Helium box that's on somebody's roof. You would pay a certain amount of money to get like an hour of internet at a cafe through the Helium network. Let's call it $1. And so that would be like a half of a Helium token to purchase it. So instead of paying in $1, you would purchase some Helium tokens and pay for internet access using the Helium tokens that you purchased. Same thing in a game. If you're buying or selling an asset in Decentraland, you would buy it or sell it with Mana, which is the token that you use in that particular gaming space. There are also other really cool applications, coins like Storage, which is STORJ, or Filecoin, where you can actually store files, similar to like a decentralized Dropbox. And you would convert your money, your Canadian dollars or US dollars or pesos or whatever currency, into Filecoin or Storage, and you would pay to use that similar Dropbox sort of esque thing in a decentralized platform. So a lot of times when people are talking about crypto, they don't even realize that it's like a whole bunch of different things, and each different crypto does a different thing. And then there are main chains like Solana, like Ethereum, Near. There's a whole bunch of different ones that are kind of competing to be the foundational lay that all of the technology is built on. So if you take a coin like Storage, which is kind of like the decentralized Dropbox, that is written on the Ethereum network. So it gets a little convoluted, it gets a little complicated, but all of this is to say that every one of these cryptos, like they actually do something. And then there are the crazy meme coins. Don't buy those. Don't buy those. They're constantly referred to in the industry as shit coins. Like if you don't know what an asset is, not a great idea to invest in those. This is not financial advice, but I personally am like, shit coins are a no for me. Yeah. So why am I telling you all this about crypto? Because I trade in crypto. I'm a crypto trader. Why am I a crypto trader? I don't really care about crypto. I really don't. But I love volatility. Volatility is what makes compounding returns compound. It's what makes my flips, which we'll talk about in a little bit, flip. So let's go back to our magic penny analogy, right? If you start with a penny and it doubles every day for 30 days, you end up with $10,700,000 on that 30th flip. Cray, wild. That's bonkers. I'm going to explain in just a little bit what all that means, but right now I'm going to give you a little bit more of a background in crypto. Crypto is a tiny market, even still today. Today it is March 11th, and the entire crypto market is worth $2.6 trillion. As compared to the New York Stock Exchange, which today is worth $28 trillion. That is a very large difference, 2.6 trillion and 28 trillion. $1 trillion already is just an inconceivable amount of money. However, there are hedge funds out there that manage $1 trillion dollars. That is cuckoo pants crazy. That is fucking bonkers. That's a lot of money. There's only so much space within the stock market. The stock market's only going to move so much. So a lot of those big hedge funds are diversifying into all kinds of different areas. And a whole lot of those hedge funds, yeah, they're real excited to get into crypto. So why haven't they already? Because there's not a lot of rules and regulations around crypto in the United States. And in 2020, the entire crypto market, right before the lockdowns, was worth about $1 trillion. So the US government wasn't even paying attention when the crypto market was worth $1 trillion. Why? Because $1 trillion is not that much money. To a government like this, they're just not paying attention. That is $1 trillion global dollars. That is not $1 trillion United States dollars. So even though there were a whole lot of people invested in Bitcoin and a whole lot of people making a whole lot of money being invested in Bitcoin and Ethereum and all of these altcoins, which is what basically any coin that isn't a main blockchain is called an altcoin. So the government just didn't really care. Then the lockdowns hit. Then so many people all of a sudden out of the blue, out of the clear blue sky, got very interested in crypto and started investing lots and lots of money into the crypto markets. And especially a lot of those people were Americans. And all of a sudden, like basically overnight, like just within a couple of months, the crypto market went from a $1 billion market to a $2 billion market very fucking fast. And a lot of that extra $1 trillion was just like US dollars from random Americans who were like, oh, hey, what is this Dogecoin? Maybe I'll put a little bit of money in it when it's 20 cents. And then it went up to 70 cents. And people were hooked. People were at home on Discord, on all these different channels, listening to podcasts. Everyone was talking about crypto all of a sudden. So some very, very smart people in the government were like, oh, well, hey, wait, what? What the fuck? There were many people who were just like, whoa, 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 whoa. This could get out of hand so fast. If this can go from 1 trillion to 2 trillion in a couple months, it could go to 20 trillion. Then we got problems because there's no regulation of this market. People can just throw coins up that are just shit coins that go boom up to like $77 and then bam right down to $10, or that go boom up to like, there was a coin called Terra Luna that was valued at like billions of dollars, and then all of a sudden the value of it was washed out and collapsed. So every single person that had money in Terra Luna lost 100% of the money that they had in Terra Luna. Yikes. Yikesy. And the exchanges themselves were not being properly regulated, as we all found out about from the FTX exchange, where the whole exchange just turned out to be basically like a Ponzi scheme. That is no bueno. However, during the Biden administration, again, I'm not a Democrat and I'm absolutely am not a Republican, and I'm not picking on anybody here. I'm just telling you what happened. The Biden administration sort of refused to put proper regulation around crypto. So they wouldn't give clear rules as to what to do. Coinbase, which is a platform that I personally trade on, this is not an endorsement, this is just where I actually really do like Coinbase, I'm not going to lie. And I did just get to be on that panel with the VP of engineering of Coinbase. And I was like, yo, really like your platform. I really do. He's like, are you going to complain to me about a bunch of things about the platform? And I'm like, no, I actually fucking really like it. I think it's very easy to use. It's very intuitive. They are not paying me to say this. I actually just trade in it every day, multiple times a day. And I really like it. So Coinbase was one of the things that the US government was picking on and filing SEC lawsuits again. So they would refuse to set clear rules around how to function in crypto. But then they would file lawsuits against people and say, you broke this rule, even though there wasn't a clear rule in place. That is my perception of what happened. During this time, basically, it feels as if the Biden administration just labeled all crypto as bad and bad actors. And so they started debanking different people at different cryptos. I don't believe I've ever talked about debanking on this podcast. A very quick understanding of debanking means that you do not have access to open a bank account, or if you have a bank account somewhere, the bankers will call you and say, you are no longer welcome to keep your money here. We are going to send it back to you. Tell us where to send it. This happens to a couple of classes of people in the United States. It happens to convicted felons. That is fucking terrible. We abso-fucking-lutely need to stop doing that. It's completely ridiculous. It's one of the main reasons why we have one of the highest recidivism rates or offending rates in the world, is because we penalize people and make it virtually impossible for them to function in a normal way in society after they get out of prison. So if you get out of prison, you can't have a bank account. Like, what? That means you have to go to like a liquor store or a check cashing place that's going to charge you a super high, very usurious fee to get your money back. That's insane. That's fucked up. We shouldn't do that. It's horrifying. It's horrifying. They can't get a credit card. They can't ever have credit. Like, how do you expect people to go and function and like go relive in society when you don't have access to any of the monetary systems within society? It's insane. The other thing that we do that too as a society in America is to people who are under investigation by the SEC, the Securities and Exchanges Committee, which is the committee that has oversight over trading, over the New York Stock Exchange, over the cryptocurrencies, over all manner of different securities and any trading exchange. Or at people who are under investigation by the IRS. Like if the IRS reaches out to your bank and says, oh, hey, we're looking at John Doe over here. John's going to lose access, or Jane is going to lose access to their bank account, like right now. And the Biden administration did that to all kinds of people at humongous crypto places that were like legit good people that were just like going living their life and starting these cryptocurrencies and were absolutely not like having rug pulls, which is where it's just a fake asset that people inflate the value of through some type of social media campaign and then pull the money out of. These were legit like Coinbase, like exchanges like Binance, like huge multi-billion-dollar companies that all of a sudden people were getting debanked from. Well, that's going to be a radicalizing experience, you know? And so if you have one administration who's just like, crypto is super bad, we're not going to put rules in place around it, we're going to debank people who are involved in it. These are like incredibly, very highly educated people with, generally speaking, with multiple degrees, with backgrounds in finance, etc., at the highest echelons of the good cryptos, of the best cryptos, of the cryptos that like actually do things, that all of a sudden are just being treated like criminals. And then you have another administration who's like, oh, hey, we're going to make sure crypto is a thing. Not only that, we're going to put part of the US Treasury into crypto. We really support this. This is an emerging technology. This is for sure coming. It's either coming now or it's coming in 10 years from now, but it's coming. And we can't just like say it's not coming and pretend like it's not coming and not participate in it. Instead, we want to integrate it and make sure that the US dollar is super secure while also investing in these new emerging technologies, which basically seems to be it doesn't seem to be, that is what the Trump administration not only is signaling, but is outright saying. They just had the first crypto conference at the White House on March 7th, etc. I'm not even trying to be political here, guys. I'm literally just telling you the background of crypto and why you saw a very lot of people in the crypto space get on board with the Trump administration because they were being penalized so harshly and so badly by the Biden administration. That is the problem of having a polarized system where you only have two choices. I am just saying, might be a whole lot better if we had like 7 different parties or something. I am just saying, might be a little bit more representative of all the different people in the United States. If we look around at each other, there's not just 2 options among all the people in the United States. So anyways, I'm just saying, might not be the worst idea to have a whole new party full of rational people who aren't screaming at each other all day, who want to make healthcare affordable. I don't know. I'm just saying. Could be. Could be. Woo! It is hot up in here, high on my soapbox. So we're going to come back down and say that is a little oversight of why things happened the way that they did in crypto. And now we're going to get into my favorite part, the volatility. So right now, there are a whole lot of institutional investors, that's another new term that we're going to learn in this podcast, who want to throw some of their cash into crypto. And there haven't been really clear rules and guidelines, but basically it sure seems as if as soon as there are really clear rules and really clear guidelines, and crypto is like a thing that people are sort of allowed to invest in without getting in trouble, the market should increase. So now that the new administration that is very pro-crypto is in place, wowza, the markets have gone wild. People are wilding out in the crypto world. The crypto markets are no longer worth $2 trillion. Nay, nay, my friends. They are worth $3 trillion. Sometimes, and sometimes worth 2.6 and sometimes worth 3.2, and probably pretty soon going to be worth 2 and then maybe 4. It is fucking crazy, cuckoo pants crazy, wild bonkers in the crypto market right now. I'm going to show you something that might not blow your mind as much as it should, but it should blow your motherfucking mind. So if you are listening on audio only on like Apple or Amazon or wherever you get your podcasts from, on the YouTube version of this, I'm going to pull up charts for the last section, and it's going to be maybe a little bit easier to understand if you're physically looking at charts, but I'm going to do my best to describe it for people who are listening on audio only. Also, my very sweet black lab Rico is sleeping at my feet, and if you hear something in the background, that's him snoring. I hope it's not too loud. So, currently today, the crypto market is worth $2.6 trillion. That is $2,680 billion. $1 billion. We like talk about billionaires all the time and $1 billion this and $1 billion that. $1 billion is an inconceivably large amount of money. And the crypto market is worth $2,680 billion or $2.68 trillion today. So on February 21st, the crypto market was worth $3.25 trillion. On February 28th, the crypto market had dropped all the freaking way down to $2.63 trillion. That means it lost $630 billion worth of value in a week. It went down by $630 billion in a week. And then in 2 fucking days, it went up by $530 billion in 2 days. And then over the course of the last week, in the last 7 days, it dropped down again to $2.5 trillion, losing yet again $600 billion plus in a week. That is cuckoo fucking pants crazy insane. So when I talk about compounding returns next, that is why I trade in crypto, because it can go like up $500 billion, down $500 billion, up $500 billion, then down $500 billion again. Who the fuck knows what's going to happen next? Could it drop another $500 billion in the next week? Yeah, it actually totally, completely can. 1,000,000%. As a matter of fact, time-wise, there has been trends of bear markets and bull markets in crypto. And generally speaking, the crypto market started to rise just about 18 months ago, and that would be a normal amount of time for a bull market to exist. And it would kind of be time for it to just like normally go back into a bear market in crypto. Will it? Kind of seems a little bit unlikely to me because there's a whole bunch of institutional dollars. That's a new term for you guys. I'm doing air quotes. There's a whole bunch of institutional dollars that are like ready to go into crypto as soon as the rules are clear. And as soon as they're not going to get penalized for having like accidentally broken a law that doesn't really quite exist yet, which sort of is what was happening during the Biden administration in crypto. So now that it feels like, hey, it's a little bit safe here, there's a whole lot of investors that are going to want to start putting money into crypto and institutional money. So hedge funds, different sort of trading funds are going to start to expand into crypto that haven't really been in crypto before. Now, there are ways in the New York Stock Exchange for people to like, quote, trade in crypto, sort of, kinda. It's like buying an index of a bunch of different cryptos. They're called ETFs, but the way that I trade, again, this is not financial advice, this is something that works for me, is by compounding returns in crypto. So, what the fuck even does that mean? I'm a quant trader. What the fuck even does it mean that I'm a quant trader? Now, I know that a lot of you watched the previous episode. Thanks, guys. Good to see you. Hello, Fanatic fans. I love my Fanatic fans. I'm looking for my first 1,000 Fanatic fans. I know I haven't said that in a long time, but like, I'm a fanatic fan of Sakara. I'm a fanatic fan of Trader Joe's. I'm a fanatic fan of a lot of places. And that means I constantly talk about them. They don't pay me to talk about them. I'm a fanatic fan of Coinbase. I just went on a whole rant about how great Coinbase is. I'm a fanatic fan of the artist Ryan Henry Ward. I have like 8 of his paintings in my house. I'm a fanatic fan of a lot of people, and I would love for people to be fanatic fans of me. That means I'm a fanatic fan of the Morbid podcast. I listen every single week. I hate it when they leave me on cliffhangers. But last week, I did leave you guys on a little bit of a cliffhanger myself when I started barely baby explaining what a quant trader is and what it means to trade on the range of an asset and why I'm looking for volatility. Hey guys, we interrupt this podcast for a very important message. Guess what, guys? I have a grown-up company now. I know. Who would have thought that that would happen so fast? I just came back into this company 18 months ago. Now, I know I just talked about the Morbid podcast ladies leaving me on a cliffhanger. They do that all the time. And I'm going to leave you on a cliffhanger. In my big grown-up company now, I have general counsel. I know, right? That makes me feel like a baller when I say that. So I asked for the general counsel at Sticker Junkie to please review this podcast just to make sure that I wasn't saying anything that I wasn't supposed to say. And guess what? I did. So I had to cut out the way in which I described compounding returns because I am not allowed to say it in the way that I said it. Mysterious, I know. But don't worry, I mean, it was a lot of charts. It was kind of hard to follow on audio anyway, so we are skipping ahead. And in the future, I will figure out how to say it in a way that I am allowed to say it. That seems very vague, but just suffice it to say I am not a financial advisor, and it came off like a little bit too much like financial advice for the comfort of our lawyers. And do you know what? If the lawyers are uncomfortable, then I am uncomfortable. So instead of diving deep into the charts and graphs, I am going to offer you some homework if you would like. What? Who the fuck listens to a podcast and wants homework? I know. But it is the same homework assignment that my mentor gave me when I was 24 years old, which is go to the Google machine or to ChatGPT or AI or whatever and ask them about compounding returns. Compounding returns are fucking awesome, and they are the way that rich people keep getting richer and richer and richer, and not only richer and richer and richer, but exponentially richer. Yeah, exponentially richer. True facts. So go check it out, learn everything you can about compounding returns, and at some point in the future, I will figure out a way in which I am actually allowed to explain them without giving detailed financial advice. Now back to our regularly scheduled programming. I created a system where I never sell at a loss. Why did I do that? And how the fuck did I learn how to trade like this? I know that there's a lot of people listening who are like, yo, girl, didn't you say you did not go to college? That's correct. I did not go to college. I didn't. I don't have any formal higher education. However, what I did have was mentors. And my main mentor, my like whole life, 25-year-long mentor who I met when I was like 24 or 25 years old. It's one of the best traders in the world. He is a very private guy. I do not ever mention him by name. He had a trading partner who was a very public guy, and he was the private behind the scenes guy. These are very, very famous, well-known traders that I knew and know. He taught me about the philosophy of trading. He did not teach me how to trade. He gave me a homework assignment when I was like 25 years old. And my homework assignment was to go learn everything I possibly could about compounding returns. I'm going to remind you that I made my first $1 million when I was 25 years old. And so while I did take that homework assignment incredibly seriously, I fucking had never met a billionaire before. I did exactly what he told me to do. He told me, here's a list of 14 books. Go read them in 6 weeks. I went immediately and bought all 14 books. I read them in 4 weeks. I called him back. He asked me a series of very difficult, wily questions that required me to put together all of the information from the different 14 books and think and create a concept of what my perception of a thing was based off of that. And I did. And so he didn't ever teach me how to execute trades, but when he gave me a homework assignment, I banged it out of the park because I was always afraid that he wouldn't take another phone call with me. I was a child, and he was like, 15 or 17 or however many years older than me, and I was a millionaire and he was a billionaire. And I was like, well, I want that. I want whatever knowledge you have. And luckily, he took calls with me for the next 25 years. And we became very good friends, and he's a brilliant, amazing, fantastic human being. And he said, I want you to learn everything you can about compounding returns. And I did. And then I proceeded to never trade. Why did I never trade when I have known this for 25 fucking years? Because I had Minecraft money. I had mailbox money falling into my mailbox every month from my Minecraft contracts. I had the exclusive sales rights on the merchandise for Minecraft. So if you walked into a store and you saw Minecraft legally, they had to buy it from my company from like 2004 until 2014. I know that I told the very sad story when the company that owned the licensing rights, I owned the distribution rights, took away Target and Kohl's from me. I really did cry tears that day. That was actually really sad. That was a fucking lot of money that I lost that day. But it still never necessitated me sitting down and taking 3 fucking years to write myself a trading system, which is how long it did in fact take me to write my trading system. Wild. So I didn't actually start trading until 2023 in January. I started writing my system in 2020. I started fucking around and running little experiments. And I was like, holy shit, this is working so incredibly well. And my mentor had told me over and over and over again several different trading philosophies. He would say, I can't teach you how to execute trades because I'm not going to be right there with you with the trade, but here are the rules. I can give you really smart rules. You have to create a system that isn't gambling to you. Other people might think it's gambling, but it cannot be gambling to you. And he said to me, anyone who thinks that what I do is gambling will never become rich from trading. And I said to him, but it is gambling. And he laughed. And I was 25 years old. And he laughed and said, well, then you will never become rich from trading. And I thought about that for years because I idolized this guy. I was like, you have accomplished in life everything I want to accomplish in life. So I finally said to him years later, I think it was in 2020 when I was writing my trading system, or maybe 2021, he came out to Sedona. And I said, hey, I actually figured out what I'm going to do with trading. I started trading. I started writing the system. I'm creating a system where I never sell at a loss. And he goes, no, you can't. You'll lose all your opportunity costs. I'm like, yeah, I know. I mean, I've heard people say that to me. I had so many people argue with me when I was like, I never sell at a loss. And I said, yeah, but you said to create a system that's not gambling. And he's like, no, you have to mitigate your risk in another way because you have to cut your losses. And I'm like, you are incorrect. I don't. That's wrong. That's not true. I can actually set up my portfolio in a different way to where I mitigate my risk in a different way and I never sell the loss. And he said that I was wrong. And then I wrote the system. And guess what? Turns out that I'm right. I never sell at a loss. If I buy an asset and it's overvalued, I would hold that until the market rose up again, and I would purchase all the way down the line and only sell at a win. Because to me, not only to me, the fucking definition of gambling is if you buy something and sometimes you sell at a loss and sometimes you sell it at a gain, you are gambling, period. That is the definition of gambling. Sometimes you win and sometimes you lose. Now, all kinds of different traders, they have different ways that they hedge their risk. They have different ways that they mitigate that stuff. And to them, it is not gambling. Everyone who trades has their own trading system, and that is fucking fantastical. I am not pushing against any of it, but I couldn't personally do that system. It would stress me the fuck out. When people meet me, if they start to talk to me and I'm like, oh yeah, I'm also like kind of casually on the side while I am rebuilding all 14 of these companies, I'm a professional level, I'm like an institutional level trader, they'd be like, what are you fucking serious? What? And I'm never stressed out. Why? Because I hold money all the way down to the lowest bottom that an asset could go, and then I mitigate my portfolio across a number of different assets. Then I have all sorts of tricksy ways that I make it go faster, but zero of them include selling at a loss. I never sell at a loss, period. Unless I'm going to get arrested for the IRS and I need access to my cash. Which brings me to another trading rule. Never invest more in the markets than you can comfortably afford to lose. Never invest enough money to where you'll actually need access to that money and you'll need to pull it out no matter what the market's doing. Like a lot of people get in that situation where they buy something and it's overvalued and they don't realize, and they need to buy a house, or they get in a car accident and they need access to capital and then they have to sell at this huge, tremendous loss. So A really easygoing way to mitigate that is to never invest more than you can comfortably afford to lose. But most people, if they only have $3,000 to invest, they're not willing to not like bet it all on something that seems like it's going to go to the moon. So I created a very patience-oriented system that really does take 7 years or 8 or 10 years to compound and move with the market. And then I lost everything, as you guys are well aware, in 2023. So I had to sell out my whole entire trading portfolio and I did not get to trade for over a year. I just started trading again in January with barely any money because I fucking owe so much money. I owe so much money to so many places that I can't like put a humongous amount of money into the market right now. But I know that I can turn $300 into $1 million. So that's going to be part of the journey that we're going to start to track. Also, I started trading in January, January 1st. It is March 11th. I have so far made 18.2% on my money. Not bad. And I'll just keep updating you as to where the trading portfolio is going. So that's it for this episode of Andrea Lake 101, The Making of a Billionaire. The deeper story here, guys, is it's not just through Sticker Junkie. It's not just through rolling out Power Chick Mafia. It's not just through bringing delinquent distribution back. It's not just through rolling back out Rhythm Sticks or Teacher or any of the other companies, Zoco Inc., any of the other companies that I've started. It's not just those companies. It's that concurrently, as I make profit from those companies, I'm going to invest in my portfolio and I'm going to trade and I'm going to tell you guys what happens with all of that too. I have decided for the financials, I'm going to deep dive on what the financials are in the company every quarter. I'll probably update you as we go along. So far in March, we're fucking smashing it. We were averaging in the first week of March $6,300 a day, and our target is $5,600 a day. Our target's 175 grand for March. We held that number because we kept laying the foundations in the other months, and we're smashing it. We're on track right now to do like 190 or $200,000 in March, and I don't know if we'll hit it or not yet because the month hasn't played out. So we'll see where the numbers go, but we're on a nice, steady upward trajectory. We're starting to get a lot of word of mouth going on in Sticker Junkie. And the more money that I make, the more debt that I can pay off. I have an outlandish goal to be completely out of debt by this time next year, which is cuckoo pants crazy because I have a lot of debt on the companies, but we have this crazy growth trajectory that we're getting back into of hitting 26% per month. And we're going to miss that on some months. We just are. And we're going to bang it out of the park and exceed it on some months. We just are. And I'm going to keep you guys posted with all of that. And in tandem with that, from now on, I'm going to keep you posted month on month with how much I make trading. I hope you guys have a really great rest of your week. And I'll see you next week on Andrea Lake 101, The Making of a Billionaire.